attention. All Tesla fans and investors, Tesla has released its highly anticipated Q4 production and delivery numbers, and the findings are creating quite a stir in the financial world, despite receiving flack from a number of experts for not aligning with the consensus of financial groups. Bretton Winston, head of research at ARK Investment Management, sees things differently. He claims that Tesla's Q4 results are not a miss, but rather revolutionary, and that higher production rates are anticipated in the next quarters, which could cause the stock price to soar to the 400 in a matter of weeks. However, before we learn more about Brett Winston's opinions about the company, I'd like you to hit the like and subscribe buttons. Now, fasten your seat belts and let's explore the world of Tesla's Q4 data and future projections. As the director of research at ARK Invest, a disruptive, innovation-focused investment management company with headquarters in New York, Brett Winton is in charge of spearheading the company's research initiatives, particularly in the fields of nation energy and mobility. Because of his reputation in the finance industry, most people would agree with Winton's commentary on a variety of topics related to innovation and finance. However, the general public should be able to at least hear Winton's viewpoints so they can form their own opinions and make an informed decision. Winton is frequently cited in financial news and media outlets as an expert on these topics. Judicious investment, it looks that Brett Winton is right to say that Tesla's Q4 deliveries were not a miss, as the automaker's VA increased by 40 euro, while the market was expecting a decrease of roughly 8% by 2027. He estimates that around 60 million electric vehicles will have been sold, with Tesla accounting for a substantial percentage of his total in the next 5 years. He believes that electric vehicle sales will account for the majority of the auto market. Tesla recently revealed its Q4 production and delivery data, which has been criticized by numerous analysts for not agreeing with the consensus of financial groups like Wall Street. The decline in Tesla's stock price last year was partially caused by Elon Musk's contentious behavior. Tesla's stock price decline in 2021 has been attributed in part to Elon Musk's contentious acts. The cryptocurrency market saw a significant downturn in value and criticism after Tesla announced via Twitter in May 2021 that it would no longer accept Bitcoin as payment owing to environmental concerns. Regulators such as the Securities and Exchange Commission have also been monitoring his remarks and behavior because he used social media to discuss the price of Tesla shares and other financial issues, but the firm was also worried about the markets for its vehicles due to the recent drop in pricing for its EVs in China and other EV markets. Some investors have theorized that Tesla is having demand issues, particularly in the vital Chinese market. Reports on Tesla's progress over the last 3 months of 2022 have been fully updated. Tesla stated that its annual vehicle delivery is increased by 40% year over year to 1.31 million, and that its annual vehicle production increased by 47% year over year to 1.37 million. However, a FactSet consensus of analyst estimates indicated that Wall Street was expecting Tesla to report deliveries of approximately 427,000 for the fourth quarter. However, the head of the research at ARK Investment Management, Brett Winton, has stated that rather than a miss, Tesla's numbers are groundbreaking, and he added that higher production rates in the next quarters could spur the stock price to go as high as 400 this year. But Brett Winton thinks production, not demand, will determine whether or not Tesla reaches its growth target, even though Tesla's demand may be falling because e-buyers haven't yet concluded that their decision to buy is due to tax credits. On some of their cars, this will eventually pass taking into account the numerous price cuts that Tesla is doing in most of its markets. So rather than waiting for another incentive or for Tesla's cars to qualify, it may be cheaper to buy the car due to the price reduction along with the Model 3. Automaker is unveiling a new vehicle chassis that will be around 50 cheaper in October 2018. Must disclose that the next generation platform would cost only half as much as the current Model 3 and Model II. So even if the project has been delayed and may not arrive for the next couple of years, there's still a lot of anticipation for the new platform. While the EV's delivery date is still a mystery, Musk has stated that manufacturing levels will much surpass those of the Model 3 and the guide press. A production improvement that simultaneously molds large chassis sections is to be credited for this. The new vehicle platform was scheduled to be introduced on March 1st during Tesla's Investor Day. Many fans and shareholders were dissatisfied with Tesla's Investor Day, which ran for several hours on March 1st. This led to a drop in the price of Tesla's shares on Thursday, but analysts were generally optimistic, and an update on autos was released on Friday. But the analysts from Deutsche Bank acknowledged that Tesla demonstrated impressive progress and presented plans for specific technological and manufacturing improvements that they believe will help maintain the company's long-term volume and margin growth. The analysts expressed their disappointment with Tesla's lack of details regarding its next-generation platform, noting that the company did not provide information on the launch timing, vehicle segments, price points, and financial implications. The 2020 Battery Day event featured a preview of an inexpensive electric automobile, but Tesla did not address it. Moreover, there was no information provided regarding the Cybertruck's delivery schedule, no information about the redesigned Roadster, and no updates on the development of the business's new heavy-duty semi. Moreover, despite Tesla's updates on quarterly calls and investor days, as of Friday morning, the company's investor relations page still did not contain a Master Plan 3 document. TS2 Trucking much did not provide any information about how Tesla intends to collaborate with his other business ventures. In line with the views expressed at the Tesla Ball, which had previously discussed how innovation could give businesses a competitive advantage, Brett Winton thinks that if Tesla can successfully build this low-cost EV, it will once again set the standard in the EV market. It was also emphasized that there were similarities between current innovations and investments in emerging economies. Speaking of which, at Investor Day, executives at Tesla refrained from revealing the company's biggest news of the week until a few hours into the event, when Elon Musk confirmed during a QA session that Tesla would be opening its next major factory outside of Monterrey, Mexico. No additional information was provided at the time. The following day, Mexican officials revealed more details about the project, including the fact that Tesla is expected to invest $5 billion in the vehicle assembly plant in the near term and $10 billion in the long term. The factory will employ between 5,000 and 10,000 workers and be built on approximately 4,200 acres of land. Musk also mentioned during the Investor Day event that he believed some Mexican officials were present, but he did not specify which ones. Thomas pointed out that it was disrespectful to treat these officials in an indifferent manner, since the new factory is crucial to Tesla's operations and Mexico's economic future. He might have addressed them by name and showed more consideration for their partnership. If Tesla can improve its self-driving technology, Winton believes the firm has a lot going for it in the upcoming years, which might lead to greater stock prices and increasing demand. He also believes that the company's performance on January 25, 2023, after the stock market shuts, will be a game changer. Tesla disclosed its financial results for the quarter and year ended December 31. The automotive revenue for the quarter was $21.3 billion, which also included $324 billion in deferred revenue from its driver assistance systems. However, the company's automotive gross margins of 25.9% were the lowest in the last 5 quarters, which may raise some concerns for investors. Tesla recently announced its Q4 earnings for 2022. The company generated revenue of $24.32 billion with earnings per share of 1.19. How much do you agree with this evaluation? Please share your thoughts in the space provided below. Make sure to subscribe and enable alerts for now. Thank you. Tesla is close to being able to produce over 1 million units per year at its Shanghai factory. The company as a whole may be able to achieve even greater production rates as a result of the ramp up throughout its plans across the world. Tesla is steadily headed towards an even higher increase in cars in transit at the quarter's end due to geographically diversified production. Needless to say, advancements are on the horizon, even with the recent setbacks.